everyone, this is Amit Pabari, founder and managing director of CR Forex. Before we discuss the outlook for rupee for the coming week, I would like to invite all my viewers to join us on our webinar on 21st of April on Friday, where we will be discussing what is the outlook for the market for the coming days and how to reduce your banking cost. In last week, most of the Asian currencies got appreciated and rupee traded below 82 level, and dollar index also went as low as 100.70. The entire reason for the drama was that most of the US economic data came on the lower side. Now the big question is where the market is heading in coming days. So let us analyze that. So the first important data point which we need to analyze is where is dollar index heading. So let me show you an interesting chart. So if you see the chart, market is expecting that the Fed is going to reduce the interest rate post the month of May, and finally the interest rate will go towards 4.22 के आसपास में, so which is currently at 4.75. But if we read the Fed minutes of the meeting, it is clearly indicating that they are not going to reduce the interest rate till December 2023, and probably the interest rate is going to stay between 5.2 to 5.5. If the market expectation goes wrong, then what will happen? Then dollar index will bottom out at the current level and it is going to move higher. So now let us analyze another chart, which is a technical chart, which is also indicating that 100 level will act as a supporting base for dollar index, and dollar index is expected to move towards 103 and 105 in coming days. If that happens, all the emerging market currencies will get weaker and it will definitely have pressure on dollar rupee pair. The second important parameter to understand where the rupee is heading, we have to understand what is RBI's stance for dollar rupee pair. If you see the chart from last 3 to 4 months, whenever we have seen that rupee is appreciated, RBI has come and intervened and bought at all the levels. So if you see, in the month of November, they bought close to 8 billion. Then January में भी buy किया, March में भी buy किया, and last week also we have seen that RBI bought close to 5 to 6 billion dollars. So it is indicating that bottoms are limited and there is a scope to move higher. Now let us discuss the outlook for rupee. There is a 80 to 90% probability the dollar index has bottomed out close to 100 level and it is expected to move higher. And at lower level, we have seen that RBI is buying dollars. And the third important point is that we are expecting the trade deficit to continue to move at a higher level, which will have pressure on rupee. Because of all of the above reason, we are expecting that 8150 to 8180 will act as a strong support for the pair, and in coming days the pair is likely to move towards 8250 and 8280 kind of a level. The overall biasness of rupee is on the weaker side, and ideally the pair should move towards 83 and above level in coming days. Now let us discuss strategy for thin margin exporters like agri exporter. Most of the agri exporter last week, they have taken costing between 8170 to 82 to 8220 kind of a level. If they have taken that, ideal strategy is that they should keep a stop loss of 8170 and cover in the following manner. 30 to 40% they can cover close to 82.20 level. 45 to 70% of their exposure they should ideally cover between 8240 to 8260 kind of level, and the remaining position they can wait for 8280 and 83. Anyone who have taken aggressive costing, they should keep a stop loss of 8170 and wait for 8240 to 8260 kind of a level. Now let us discuss strategy for thick margin exporters. For thick margin exporters, the strategy remains the same. They should keep the hedge ratio between 40 to 45%. And whenever the rupee is trading below 8250 or 82, they should just simply pre-utilize their existing forward. For booking, they should wait for higher levels between 82.5 to 82.70 kind of a level. Now let us discuss strategy for importers. In my last 15 years in the market, I have learned a simple strategy that you should never go against a big player in the market. And in rupee, currently the big player is RBI, which is of the trend that he is buying dollars at all levels. So importers should simply buy at all dips. So any dips between 8150 to 8180 should be used as an opportunity to cover imports for next 45 to 60 days. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.